We are at the precipice of something big in the markets. We could absolutely watch something massive happen in the next few days as we are in the last full trading week of Q2. We just have Monday of next week as the last day of Q2 trading before we start to get into Q3. I think we're going to see some massive moves happening, and I have the technicals to share with you where I think that we could potentially go and wait until you see it, not only for the stock market, but also for the broader crypto market as well. And by the way, I am the expert of the week over at the Discord. Links down in the description. Code word doctor when you sign up for that using the earner tier with that first month. Check it on out. Join the community of thousands of members who are over there already to see me and the other experts sharing our insights and our knowledge and our time with you to help you pursue financial freedom, and also to build alpha in your portfolios by giving you the most relevant information that you need in order to find that success. So guys, let's jump into the charts on this. So the very first thing, QQQ, what I've been talking about is watching the 5 and the 13 EMA. It might seem simple, it might seem basic, but I'll tell you what, we are about to drop off this candle that's right here, and we're going to trade it up. That closing price that we had at 527-ish, it was 526.96. Today's close makes a big difference in where we find this green 5-period EMA end up. And the thing that we really want to watch for is that cross between the 5 and the 13, which you can see right now. They aren't crossed, they might be close, but they're making sort of a brontosaurus neck and head, if you will. Maybe it's a giraffe to be a little bit more relevant, or I actually like to refer to it as a goose head on this. And that's my own terminology, just talking about this right now. But that cross of the faster moving averages down across the slower moving averages is a bearish crossover, and we want to be aware of it. The 5 and the 13 being two of the most relevant timeframes you'll find for that. The RSI is still up above 50, so still in bullish territory. But like I said, this candle for the 5 is going to get dropped off. So today's close really makes a difference in where we find that 5 EMA moving. And then the 13 is the yellow one that you see on there. And if we grab our little tape measure or measuring stick here and go back 13 bars, that takes us all the way back to this one right here on the charts. And that closing price is at about 523. So today's close, if we trade that off, that could push the 13 up. So that means that the two moving averages, the 5 could be coming down more this way, and the 13 could potentially be coming up this way, which means a sooner near-term cross for them. Now, mind you, combine that with an RSI dropping below 50, and you have a recipe for a further decline from where we find ourselves at right now. Now, we don't know that it's going to go that way because we don't have that confluence, and we always want to go across several different indicators that are out there, and never usually on any single one of them. We don't have a lot to really go on right now, other than some maybe early information that this thing might roll over on us. Now, mind you, if that cross never happens, if we regain support with the 5 and the 13, that is a very bullish thing. The RSI is already in bullish territory, so that would be that confluence that we're looking for. And there's also some other moving averages that we have on here that are worth paying attention to. So if we zoom out and look at the longer term trend, there's the 50 up here, which we happen to be above. The 200 SMA or EMA is also below that, which is a good thing to have the price action above it. Look at these simple moving averages. We are at that golden cross moment. Most likely we're going to have that happen in the next day or two here, that we'll start to see the 50 cross up over that orange 200 day. We're sitting on top the 20 SMA. That's important for us because that goes along with the typical measure that we have for our Bollinger Bands, which means that we've been up above that 20 period simple moving average. We reverted to the mean, and now it's important to see if we move back up towards that top line part of it. As long as we keep that 20 as support, that's a bullish thing. If we lose that, if we drop down below that, then we have it as resistance for us, then reverting to the mean, of course. Then we're watching to be, okay, can we get back up on top that 20? Do we see further bullishness happening from here? So that's the longer term trend that we happen to be bullish on that longer term trend. Near term trend is what I'm looking at right now to see, okay, are we going to see a change in behavior? Are we going to see early signs that maybe it's the time to take a couple short trades on this? Or is it a time to go long? As a matter of fact, I've kind of tapered back on my trading just for a little bit in terms of the Qs. Well, besides the 0 DTEs for day trading, but that's different. But for sweating overnight risk and maybe even weekend risk, it's been something I've been apprehensive of doing for a number of reasons, not the least of which has been the fact that we're near these two top periods where we tend to sell off a little bit, and we can definitely get that choppiness happening, and that choppiness can at the very least eat up your time value if you don't have the right amount of volatility to really make those options pay off. Now, mind you, you can do things for low volatility plays where you trade in a range, for example, with the options. And if you guys like options, or if you want to know more about options, there's a link in the description through StockMo Academy. StockMo, Mrs. Bo are personal friends of mine, both of whom are absolutely wonderful for seeing what's going on in the financial markets and also really collaborating as career educators, as I'm also a career educator with 17 years in the field and my earned doctorate in education with a concentration on educational technology, a master's degree in instructional technology. These courses are top-notch. They are the best educational courses that I've ever seen. Plus, they're also all about finance, about technical analysis, about how to trade using technicals, about how to trade using options. Coursework down in the description, StockMo Academy, code word doctor is going to get a massive discount. Bundling those courses is going to get an even bigger discount. Let's pop the charts back up here. So for the cues, watch that 5 and that 13 EMA. And if we get that 5 down over the 13, that's the first sign that we're looking for, that we could see a little bit of short-term pain. But again, that's near-term. That does not mean total bearishness in the markets. SPY is going to be very similar. With the 5, we're watching it to see whether it crosses the 13. We already closed down below the 5 candle that we have, the 5th one back from back here. So this 5-day that we're looking at right now for SPY, we've already crossed over it. Or we're already traded down under, I should say. So today is also important because this is going to be our top one here. We're going to lose this closing price. If we close down lower, that's going to put further pressure on that 5. It's going to drop it down more from where it's at right now. And then 13, if we do the same thing we did for the Qs on this one and go back 13, that takes us back to this candle back here, and that would be a significant drop to get down there. So most likely the 13 is going to move up just a little bit on it, but the EMAs are further weighted towards the near end of the action, the price action, the time, more so than the simple moving averages, which weight each candle or each day equally. So if we go over to IWM from there, boom, there we go. The 5 on this one, again, here back here is the 5th candle that we have. 5 days back today, this one's going to fall off. This will be our 5th candle instead, so it matters where we close on that one. And the 5 is absolutely just so darn close to where we have that 13. That crossover is almost happening between the two of them. So for IWM, for the Russell 2000 stocks, I think that this is going to end up being an outperformer for us. The question that we have, of course, is when. I will say, when you look at the technicals that I have on this, you can see the inverse head and shoulders that I've been talking about. We have got to get back up on top of this yellow trend line. So today is highly impactful for what we could see. We are in actually long-term bearishness right now, according to the 200-day moving average. The RSI is still up above 50, so in bullish territory. And if we take down the EMAs for a moment, you can see that we're still sitting on top of this 20 SMA. The 50 is starting to inflect up. It's starting to curl up towards the 20, up towards the 200. The 200 is nice and flat, which can cause solid resistance to happen, but we are still down below that 200-day. That'd be longer-term bearishness. We got to get on top of it to flip that over to longer-term bullishness. And then we have the bullish crossovers that can also support us. So you might have people talking about doom and gloom and like massive sell-offs, and there is that potential that happens. But for right now, we don't have the confirming evidence that the market is going to completely roll over and then we enter bear market period. Instead, we have some things that suggest that the market could pull down in the short term, but the longer term technicals are still showing us very much in bullish territory for the time being, which means that the dips that we have set up for significant opportunities, and then we have to watch the economic reports that come out and have to continue to monitor sentiment to see which direction the market could continue going, whether it's still upward or if it's one that's going to switch to being a net downward over a longer time period. And you guys can do that yourselves. You can learn how through the courses that I've mentioned. You can also join us over at the Discord, where there's thousands of members already over there, including the team of experts that you have helping you to navigate these markets and to help understand what's going on in the markets and to help you understand the sentiment that is currently prevailing in the markets. Like I said, links down in the description for that one. So for IWM, I think this has the outperforming time coming for it. And we do want to get back up on top of the 200 days, see that happening. Over to Bitcoin. Bitcoin right now lost. If I talk about the crossovers, the bearish crossovers, here we go. Here you see that green 5. We actually crossed over with the yellow 13. We failed to get back on top of it here, and we've sold since that time. And then we've also crossed down below this red 50 EMA. We got that cross of the green over the red, so that bearish crossover. We had that further drop. Yellow crossing over red is even more bearish, so we want to watch for that one. So for crypto, we could see crypto soften a bit more from here. According to the technicals that we currently see for Bitcoin, even if we drop down to a 4-hour chart on this, the RSI happens to also still be bearish, and you can see that rejection that we're getting off the 13 EMA. So if you want to know the near-term time, okay, when are we going to see that bullishness return to Bitcoin? Well, go to the 4-hour chart, watch for us to retake the 13 period exponential moving average, and that can be one of your earlier signs. The earliest would be the 5, but that's also going to be very noisy for us. The 13 is going to take out some of those noise. Plus, when you get on top of the 13 for long enough, you can have the 5 cross the 13, a bullish cross back to the upside. We're down below the 50 and the 200 on the 4 period, this 4-hour chart that we have. So for the 4-hour period chart, we have that bearishness being the prevailing sentiment that we see right now, with some nice strong bounce that we have off of support right around that 98,000 mark. And I have those technicals on here where you can see that. And for these rays that I have drawn for you, these are very critical, very key rays that actually go back, well, over a decade, I believe, in their formation, and they keep on affecting things today. So if I go out to the monthly chart and reset the view, you can see this fan type structure that's on here, sort of like the Fibonacci speed fans, if you will, and we happen to be towards the top of that, and these show us very critical support and resistance. And I should say that the starting point for this was 2013, but then these come off the peaks that we saw going all the way back to 2021 and into early 2022 for these most recent rays that we have up here that are showing us that support and resistance. Now, as for where you see this bottom one, if we go to the daily chart, why did we find support there? If I put up the Bollinger Bands for you, you can actually see that we got a touch on the 3 standard deviation Bollinger Band before retracing. And this white 20 period, let me take down the EMAs for a moment. This white line that you see in between, this is the 20 period simple moving average. We did retest it for resistance, we found it, and then that's where we got that bigger sell-off over the past several days for Bitcoin. Right now, the next thing to do in terms of these rays is to sit on top of this ray that you see going across your screen, right about where the price actions right now. A rejection here could send us back down towards support. That would be this next ray that's down from here. And if I put up some of the other technicals on here that I have for you for Bitcoin, we'll take down the rays and we'll put up the retracements and the extensions. There you go. You can see the sort of support that we're sitting on right at about that $100,000 line. Losing that 100,000 could send us down to about 97,000. And you'll notice that the Bollinger Bands, as the days progress, they'll probably continue to widen for a little bit as those standard deviations away from the mean might happen to expand for us if that variation that we get in the data happens to also expand. So guys, let me know what you think down in the comments of this video for the markets. Are we seeing a near-term pullback, or is it just going to rubber band on us immediately? Or are we going to see a longer-term downtrend coming for us in the very near future as we get into Q3 and uncertainties mount? My goodness, I would absolutely love to know your thoughts on that. And then also for crypto, for Bitcoin, if we continue to head in this bearish direction, how low will Bitcoin go? Do we see anything below 90,000? Do we start to see 80 or 75,000 start to pop out? Or is it something that we quickly recover from and then we start to put in those new all-time highs? I still think, by the way, that we have new all-time highs coming within 2025. I thought June might be that time for the stock market, for the crypto market, but I'll tell you that is quickly eroding away that time. We have 1 full week left for Bitcoin to put in a new all-time high. Now, mind you, I was talking about the stock market hitting the new all-time high, but I will say for Bitcoin, I do think that we have some massive outperformance coming by the end of 2025, even if we have to go through a rough patch first to get there. And then it's the same thing for the stock market, that I do think that we have new all-time highs coming, probably quite a bit higher than what we had most recently, going back to, I believe, February of this year is where we saw those all-time highs for the NASDAQ 100 and the S&P 500. We might have to go through a rough patch to get there first, but I do think that time in the sun is coming, and it's likely within 2025. We're going to have to watch the reports as they come out. We're going to have to track sentiment as it comes out, and we're going to have to watch the technicals as they develop, and I'll keep on coming back here and reporting it, and my other technicals, my other analyses, my buys, my sells, along with the other experts doing very similar things for their own parts of the market. You can find us over at the Discord, links in the description. Find that earner tier when you sign up and use the code word doctor. Check out everything that we have to offer, not only the experts over there, but also the bread bot, which can tell you those massive moves are coming to your favorite plays, the advanced charting tools, the AI tools. I'm telling you that the opportunities, the products, the services, they are seemingly endless in that ecosystem that is the Discord that we are all part of. Come on over and join the party. And then if you want to further develop your skills with technical analysis, technical trading, or learn more about options trading, find that coursework through Stockmo Academy down in the description. Code word doctor will also give you a discount on that. Bundling the courses is a match made in heaven. It will give you a discount for that bundle, but then code word doctor, man, oh man, does it significantly reduce that cost to something that is so darn affordable that, I mean, it's an opportunity that just can pay back in dividends over what you're going to spend on it. And I think you're going to find some wild opportunities that you didn't even know existed through the knowledge that you gain in that coursework. Guys, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.